Remember back in late 2022 and early 2023 when everyone thought Google was finished. ChatGPT launched, Microsoft invested billions into OpenAI, and the media rushed to declare that Google's search empire was about to collapse. Headlines screamed that ChatGPT was the Google killer, and analysts said Alphabet's best days were behind it. Fast forward to today, and not only Google has survived, it has thrived. The stock has officially broken past $200 a share, hitting all-time high and proving the doubters wrong. In this video, I'm going to break down exactly how Google got here, the risk it's still facing, how it actually makes money, and check the latest earnings to see how the business is doing overall. We'll also look at whether Google is actually winning the AI race, despite what critics once said. Let's dive in. To understand why Google dropped in stock price, we need to learn the current risk the company is facing. First, the most obvious, ChatGPT. When OpenAI launched ChatGPT, it completely shifted the conversation about how we search for and consume information. Investors panicked that traditional search, Google's golden goose, was going to disappear overnight. Microsoft fueled that fear when they integrated ChatGPT into Bing, and while Bing got a small spike in usage, it hasn't actually put a dent in Google's massive 90% plus market share. Still, the risk is still there. If AI chatbots eventually replace how we search, Google's ad-driven model could face real disruption. Second, the Department of Justice lawsuit. The DOJ is currently pushing an antitrust case against Google, and there's even talk about forcing them to sell Chrome, their browser that dominates the internet. Chrome is a huge piece of Google's ecosystem. It's just not a browser, it's also the default gateway into search, Gmail, YouTube, and everything else Google offers. Losing control of Chrome could make it harder for Google to direct traffic into their own products, and that will weaken their dominance in search advertising. And third, general competition in AI. We got OpenAI, Anthropic, Meta with Llama, Amazon investing heavily in AI models, and a wave of startups attacking different parts of the market. Even if Google stays strong, margins could get pressured as AI becomes more expensive to run, and as competition forces them to keep up spending heavily on research and development and infrastructure. To understand the full scope of the risk, we have to break down how Google makes money. When we talk about Google, most of the people think of search, but the company actually has multiple revenue streams. Let's break it down by percentage of 2024 revenue. Let's start with search. Still the backbone of Google. Over half of every dollar Alphabet makes comes from search advertising. Businesses pay Google to appear in front of billions of people searching daily. This dominance is exactly why ChatGPT was seen as such a threat. If people shifted from Google search to AI chatbots for answers, that could eat into this huge revenue engine. Number 2, YouTube ads. YouTube is the world's second largest search engine in itself. Ads here are video-based and highly targeted, making YouTube a massive growth driver. Even if AI changes traditional search, Google is sticky. People watch for entertainment, news, tutorials, etc. That's hard to disrupt. Number 3, we got Google Network. This is ad displays on partner websites and apps using Google ad tools. It's a smaller but still significant piece. A decline in search traffic could also ripple into weaker demand for network ads, since advertisers tend to spend where the eyeballs are. Number 4, we got subscription platform and devices. This includes YouTube Premium, YouTube TV, Google Play, Pixel devices, and hardware. It's a stable, diversified stream and less tied to search. Growth here shows Google is building beyond ads. Next, we have Google Cloud, one of Google's fastest growing segments. Cloud revenue comes from businesses renting Google infrastructure, AI services, and enterprises software. Even if search were disrupted, Google Cloud could cushion the blow. In fact, AI demand is fueling cloud growth. Google provides the GPUs, TPUs, and platforms that power AI models like ChatGPT. And last, other bets. This is Waymo, which is self-driving, Verily, which is healthcare, and other moonshots. Small today, but potential future growth areas. I do understand the concerns investors have because, in fact, the largest revenue segment of the company is tied to one single thing, search. Despite Google proving that it is winning the AI war and the DOJ case is still pending, Google is thriving, and that is seen in their latest earnings report and reflected in their stock price. The year-over-year percentage growth from Q2 earnings clearly shows that ChatGPT nor the DOJ has stopped Google from growing. Search is up 11% year-over-year. YouTube is up 13%. Google Network is down 1.2%. Subscriptions is up 20%. Cloud is up 31%. And other bets is up 2.2%. So overall, the business is rapidly growing in a healthy direction. And despite search being the largest revenue segment, we have other segments growing faster than search, which is YouTube and cloud. If this pace continues, this can reduce the dependency on search, therefore reducing the revenue risk of the business. Now, you may be asking yourself how Google is pulling all of this. How is it staying ahead while being threatened by artificial intelligence and the DOJ? The answer is simple. Google implemented artificial intelligence into their existing products, enhancing the quality and improving the user experience. And we can see that with search, adding AI overviews and Gemini integration. Google is blending AI directly into the heart of its business, search. AI overviews. When users ask complex questions, Google now generates a synthesized conversational summary instead of just links. This makes search more like ChatGPT while still keeping ads in the mix. Gemini integration is Google's flagship AI model. Gemini is embedded into search, helping refine results, translate queries, and better understand context. This defends their dominance in search even against OpenAI plus Microsoft Bing. Number 2, we got YouTube, AI for creators and viewers. AI is improving the content recommendation with more personalized feeds. Google is also giving creators AI-powered tools like automatic dubbing in multiple language, smart editing, and AI-generated video ideas. For viewers, features like AI summaries of the video are being tested so you can quickly grasp long content. Number 3, we got Google Cloud. Cloud is now Google's fastest growing segment. They are embedding Gemini into Google Workspace like Docs, Sheets, and Gmail with features like Help Me Write in Gmail, AI-generated presentation in Slides, Smart Data Insight in Sheets. Google Cloud also sells AI infrastructures to other companies, training their own models. This puts them in direct competition with Microsoft Azure and AWS. Number 4, we got Android and devices. Gemini is being built directly into Android, creating what Google calls AI-first smartphone experience. On Pixel phones, AI powers like Mega Editor and Magic Erase for photos, call screening and spam detection, Circle to search, where you can circle something on your screen and Gemini will explain it instantly. This helps Google defend its mobile ecosystem against Apple and other rivals. 5, we got ads. Google's bread and butter is ads. AI is now central to how ads are placed, automatically generate ad copy variations, optimizes bids in real time, matches ads more accurately to queries with conversational search. This means advertisers get better ROI, keeping them locked into Google's ecosystem. And last, we got other bets, which is Deepmind and Waymo. Deepmind, which is Google's AI research lab, drives breakthroughs that flow into search and cloud. Waymo, that's their self-driving car unit. It uses AI to train autonomous driving at scale. While not a big revenue driver yet, it showcases the long-term optionality. So why this matters for investors? Google didn't just launch a chatbot like OpenAI. They integrated AI across every money-making product. This makes their moat even wider. Search is smarter, YouTube is stickier, cloud is stronger, Android is more useful, and ads are more profitable. Instead of AI being a threat, it's becoming Google's next growth engine. Is Google a good buy in the current market? When we do a discounted cash flow based on earnings, it is done to project the value of a stock in the future. Assumptions are never 100% accurate, but it is a nice complement to have when analyzing a stock. Google currently has a $9.39 earnings per share, and the growth is 19%. With all the advancements Google is doing with AI, I strongly believe they can sustain this growth. So I'll use 19. Google is currently trading at a 21 P ratio, which I believe it is cheap for the company. Google deserves to be up in the 30s with Microsoft, one of its competitors. So I will use 30 as the PE. And last, analyze return. Google is a unique company with world-class products. Despite being a $2 trillion market cap company, it is still expanding and fast. This company should be a market-beating compounder for the next 5 years. I will be using an average return of 15%. The calculations results suggest an entry price of $334 for a 15% return year over year for 5 years. However, Google is trading at around $200 per share, marking a margin of safety for larger returns. Keep in mind, these are my assumptions, so by any means, do not take them as investment advice. Now, do I own Google in my my portfolio? Yes, Google is currently my second largest holding, but getting closer every day to become number one and overthrow my largest holding, which is Hershey's. I do believe in the future of this company. It's already proven that ChatGPT and Google can coexist, but Google will scale faster. The DOJ situation is yet to be resolved, but I personally don't think it's a smart move to force Google and sell Chrome. Google has proven to adapt to the adversity that competition presents to the table. The market is just not seeing that. I will personally continue to add to this holding while not forgetting about my other core positions. Thanks for watching to the end. Hit like and subscribe for more content like this. I'll see you in the next one.